Go ahead and share my screen and share it clean. And a happy Monday morning to y'all. Big news from overnight. It's actually a pretty big weekend here in Indianapolis because our hometown hero, if you will, Mr. Peyton Manning won the Super Bowl last night in Denver Broncos. If you follow the National Football League at all, we also had two of our hometown favorites, Tony Dungy and Marvin Harrison, both got elected into the Hall of Fame, which was actually very cool. So pretty good weekend here in Indy. Denver won the Super Bowl. Carolina lost, so that was a big one. Yes, I know it's Denver, but we still root for Peyton Manning here in Indianapolis. It's good to see him get a win. And let's see here. I'm actually in a chair right now, so that's good. I'm not doing the class from my bed. Back is getting better. Went to the doctor on Friday. I'm sorry, last Thursday, and then I went back on Friday, and in the afternoon I went to a chiropractor, and he did something that made my back basically put me in the most pain I've ever felt in my life, but afterwards it felt better, putting me in some kind of wrestling hold, as I would call it. All right, we're not in too big of a hurry to place any trades right now, so let's just talk about where we're at right now. Only trade I placed on Friday, which should have been the only trade you placed, was here on the yen. We placed a trade as the yen was breaking up above this consolidation after the non-farm payrolls. The non-farm payrolls, I'd gotten a couple emails about like PitView and indications on news announcements, and non-farm payrolls is it's not a very predictable news announcement based on liquidity provider activity. What we felt would happen is after the non-farm payrolls came out negative, we saw the dollar dip on the yen. We saw it start to break out above consolidation. We actually went long way up in here and put our stop 50 pips away and ended up getting stopped out. Basically, our speculation was the fact that the futures did increase. The futures started buying up after the non-farm payroll report came out. We thought it would be an up market day, and the market did end up tanking a bit there on Friday. So that came down and stopped us out, but we didn't really get into any other trades. It was basically just a whole day of consolidation right in through there. Obviously, when you look at the market as a whole, and you don't really have to look at stocks, you can even look at dollar yen. We're still in a risk off mode in the market. I mean, we're still in bearish mode. The futures today are down 200 points here in the U.S. I know the FTSE was down like 2%. The DAX was down like 2%. Is down 2%, I should say. So bears are still really controlling this market, and it's kind of one of them things to where what we've seen from last week was the fact that the dollar has been kind of following that trend, although it has been extremely consolidated. So here on Monday, it's a very hard call to make as far as direction goes. There's kind of a lack of news out this morning. If you look at kind of what's gone, it's interesting because the dollar's been kind of weak across the board with like the commodity strong with the commodity currencies since Friday. Stronger versus the CAD, stronger versus New Zealand, stronger versus Aussie. And then you have the Swiss has been sideways. Euro dollar's been mostly sideways. Pound has been making some, dollar's been very strong versus the pound since Friday. And then here on the yen, you got kind of some sideways actions working out in through here. So, I mean, it's really a mixed market. So when all else fails, there is a significant lack of news this week to start off the week, especially. The markets are indicating a negative open, so a risk off type of market condition. Oil's pushing below 30 again, which is pushing the dollar CAD higher or making the Canadian weaker. There's a lack of really any key news this week until Wednesday. If you pull up kind of all the news that's coming out this week, You don't see the red is on Forex Factory is generally going to give you your highest impact events, and there's nothing really coming out until Wednesday, which is a big one. At 10 a.m. you have Fed Chair Yellen is testifying, which should be interesting because that'll be a big indication on how soon the U.S. Fed might raise rates. If she uses any type of verbiage like considerable time, it could cause, I think it could cause markets to actually recover a bit here in the U.S. especially. And then, that's 2 days worth of testimony right in through there. And there's really not anything coming out U.S. wise or really anywhere. I mean, you got the GDP coming out in Germany. You got the retail sales number coming out in the U.S. on Friday. But you go through here and there's really not a whole lot to hang your hat on as far as key news. In the absence of fundamentals, technicals generally take over. When we've seen that happen in the past, we've generally seen volatility shrink up quite a bit when there's an absence of fundamentals. So the best thing we can do is really just look to trade into technicals, which is where we'll start at this morning. The other thing going on is it's a bank holiday in China throughout the week as they celebrate their Spring Festival, the Chinese New Year. Believe it or not, this could lead to some lack of liquidity in the market because even though we don't trade the Chinese yuan, or yuan, whatever you want to call it, China is still a big player in the Forex markets as far as accumulation and distribution goes. So the fact that China's closed down, and they're also a big player in gauging market volatility when their markets are up and down. So that's going to probably shrink some volatility out of the market, the fact that it's a bank holiday pretty much for the week throughout China. So the best we can really do is just look to technicals. But I would still favor more of a risk-off approach to the market, with all things being considered. And with, lack of liquidity could lead to volatile whipsaw movements, which we always have to look out for whenever the market's looking at more of a, lack of liquidity means that, if there's no real volume driving the market in either direction, then it could be very easy to see more of a sideways type of market action, kind of like what we've seen here on dollar Swiss, what we've seen on the yen here, when the market has no drive in one direction or the other, you can only point to the underlying trend, which has been the markets being down, which has generally last week it led to more dollar weakness in the market, with futures being down 200 a day. Like last week when the markets were going down, the dollar was essentially got weak across the board, even right in here versus the commodity currencies. So looking to trade more technical, risk off, in my opinion, we can either look to trade into more dollar type of strength for risk on, meaning markets up, or risk off would be taking us into dollar weakness. So any trades you place today, I would say do not enter a trade if you're not already in one. If you're already in one that's profitable, good job, but do not enter a trade until after 9:30 a.m. until at least the U.S. markets get rolling. We are indicating a negative open. Futures, I'll just go with the Dow futures, but that usually is a more holistic indication. Dow futures are down about, let's see, they were down almost 200 points, indicating a slightly negative open. Well, we'll look at dollar yen also, but I'm going to look at pound dollar first, right in through here. Because pound, if we're going to look to trade more technical, has made a nice little A, B, C correction right in through here. We haven't had that great of luck with Gartley patterns as of late, but doesn't mean that it's not a long-term good strategy. It's just that sometimes we've gotten the elevator and sometimes we've gotten the shaft. In fact, let me pull this up on this screen right in through here so you can kind of see what I'm looking at better. This is starting at right at the lower edge of the 4,300 level. And we've seen that we've gotten quite a bit of support in through here. We got a nice little A, B, C type of action working on here. We're going to be, there we go. I like the fact that during this downtrend right in through here, you've actually seen a divergence occurring. Throughout this downtrend, you've seen LP providers coming in and building this thing up. So there's more, you know, it's all favored the buy side of the equation on the LP trend line. So if we're going to trade more technical, I would like to kind of go with the overall flow of the LP trend line, which has been pointing up even throughout this little ABC right in through here. It's been making higher highs, if you will. You can see it's been consolidated since the market opened yesterday. But one thing I am looking for here is I would like to take a buy here on the pound, just because if the markets go down and this trend of dollar weakness when the market declines continues, if there's one pattern that you would like to trade through that, it would certainly be this one, because it's this 78.6% retracement is right at the 4,400 level. You can see that red line right in there is right at 4,400. So if we're going to be speculators, why not speculate on the ground, the pound holding some ground there at the 4,400 and bouncing up above on this bullish Gartley pattern. But I'm going to be a little bit cautious here starting off this Monday. Let's see here. I'm going to go ahead and put in a buy entry. After 10 a.m., that's 10 a.m. Eastern time. So we're waiting until after 9:30, but I would like to see it close above that 4,400 level. And we're not looking for the pound to really, it's already overextended itself a bit here. It's down almost 200 points overnight on the sell side of the equation here on the pound from where they opened up over in London. I think a big part of that is the DAX being down and the FTSE being down. For a stop, just put it 1 pip below the swing low. And since we are in some state of volatility here, 50 maximum, I mean, these look like small moves, but they're actually not. And then for a limit, I do think if the pound bounces, the 4,500 level is like right up in here. So, you know, I think we can look for a little bit more on our risk reward this morning. So look for 1 to 1.5 risk reward. Instead of going limit 1 and limit 2, I'm just going to put in a 1 to 1.5 risk reward. And as I'm in the trade, keep on trailing it up once you get in using a 3-bar reversal. So trail that stop up. Again, that's, you know, that gives you kind of, as a swing trader, which that's primarily a lot of what we trade in here. Although as we get started into more classes here going into February and March, we're probably going to start looking at more short-term strategies too, based on some student feedback. But this has already overextended itself to the downside as far as the ATR. So, this also can be looked at as trading into more of a dead cat bounce here. But a lot of this is going to be gauged based on once we get all the major markets open. So we already have the DAX, the Financial Times Stock Exchange, they're all open except for the U.S. markets. I think we want to wait to see what the U.S. traders do with the markets here this morning at the open. I look at this right now as being more of a risk-off trade. Which would be dollar weakness, because that's what we saw last week. We saw the dollar overly weak across the board. There's a lot of, somebody said they got burned going long pound dollar at the London Open last night. I'll kind of give you a snapshot of this here in just a second, but pound dollar buy. This would be considered a bullish Gartley pattern. It's one of my favorite patterns in the market, especially if it lines up with my view, which is if the market comes down, let's go ahead and trade into more dollar weakness. And also the fact that it's gone it's overextended its average range by so much. We could see a nice little dead cat bounce there on the pound. Let's see, it's starting to come down a little bit more. There we go. Kind of moving through the different scenarios here also, and I'm going to go to euro dollar next. Sorry about that. Will the weakness of oil drag the pound down? Absolutely. If the markets continue down, if oil is right now, I think a large part of this move to the downside on oil that we've had, with oil being down, you can see oil's down like 3.72%, so it's down 30 a barrel. With oil being so weak, I think that's one of the main causes for the pound making that trip to the downside. Here, I'll pull it up on the other chart. I think that's the contributor here on the pound as far as one of the reasons why it's gotten so weak overnight. So I think the fact that it's down 3% or whatnot on oil prices is one thing that's been dragging the pound down. However, once the U.S. markets open, one thing that we've seen is, and this going back to last week, is that even with oil prices being down and even with stocks being down, we're going to, until we see a trump of this trend, we're going to assume that perhaps if the market does go down today, that the dollar will continue trading risk on. And what that means is if markets are down, that would mean dollar down. We wouldn't need that big of a bounce here on the pound. So that, this is more of just a technical trade, but you're absolutely right. I mean, I think this is what, oil being down 3%, I think is already built into this pound price right down in here. I think that contributed to the pound going down. I think it contributed right over here to the CAD getting weaker and commodities kind of selling off across the board over in here. So, these commodity currencies sold off based on more of a risk-off approach. So, this is more just technicals, just looking for some kind of bounce, dead cat bounce on the pound here because it's already kind of gotten driven to the ground based on those negative oil prices. But if I do consider risk off, because if the market does open and these prices continue down, we may see a large dollar sell-off. And if not, if it continues to the downside and these oil prices are still affecting the pound, then I think that it will just continue. I think what I mean is it will just continue down. I don't think it will give us any execution here. It'll just probably continue to the downside. So we're still looking at the market from a fundamental standpoint, but just looking at this also from a technical standpoint of what the pattern is and seeing if this overextension to the downside on the pound can be, if that can be a driving factor in making this possibly make that dead cat bounce back to the upside. Let me switch gears here to the euro dollar. The Gartley entry would be after 10 a.m. Eastern time. I should probably write that on there. I'll write that on when I go back here. I'll just do it now. There we go. And then on the euro and the Swiss, you can kind of pick between these two right in through here. Trying to choose between these two, I think the euro has kind of a better key level to go with. But euro and the Swiss have both been kind of consolidating right in here on the downside. You can almost see the semblance of almost like a inverted head and shoulders, or even a double bottom formation right in through here on the dollar Swiss pair. And the euro dollar has much the same type of situation while working on it. The problem here is that a lot of these are favoring dollar, favoring long positions. When you kind of look at the LP trend line here on the euro, same thing as the pound. It's been kind of pointing straight up. So a lot of these are making the same types of formations, which shows that kind of the dollar is kind of driving the market right in through here. You can see the euro has been kind of consolidated right in through here also. But it has been favoring the buy side of the equation on the pound and a buy side of the equation on the euro also. But looking here at the euro dollar, kind of as a way of the market telling me what direction it wants to go here this morning. In order for this trade to execute, we would certainly want this. It's been in the buying pressure scenario here. It's been actually making a little bit of a divergence from the overall trend here on the downside also, much like the pound. So this and the pound would be basically the same, basically looking to trade the market in either direction. Think if the dollar sells off, it'll bring the pound up, it'll bring the euro up, it'll bring the Swiss down, it'll bring the yen down. Commodity currencies, who knows, like the CAD, Aussie, and New Zealand, but these main four, basically trading the dollar in either direction would be the strategy here. So I was looking here, and that we're going to do the same thing, only to the downside here on the euro dollar for a sell entry. I'm going to talk about the euro here in just a second also. Notice I'm using a close. I'm using a close below the 111 level. So I want some obviously on both the pound and the euro, kind of trading the dollar in either direction here. I want some type of indication and added confirmation on this trade that it is in fact going to that it is closing below a key level. or in the pounds case, above a key level to buy into dollar weakness. On the euro, in the euro's case, to sell into dollar strength, but it has to give me a pretty stand-up confirmation on these. I'm not going to lie, the lack of kind of liquidity with the Chinese holiday, Monday morning, which everybody considers, I don't know if you know this about traders or not, but this is kind of an off the cuff factor also in the market. It is the Monday after the Super Bowl, and I don't know if you know this about some of the big hitting traders, is that a lot of them are big gamblers too. The Super Bowl weekend was certainly one of the weekends when I worked in Chicago on the floor. Basically, all the traders would leave on either Friday night or Saturday morning to go to Vegas for the Super Bowl and come home usually on Monday morning. So it's kind of National Hangover Day, especially for traders. Not for me, because I just watched it with my family last night in the living room. But for a lot of traders, that's what they do. So that kind of lack of liquidity and action in the market could be a factor. For the stop, this is kind of more of a 3-bar reversal type of stop. 1 pip above the swing high. You know, it's kind of come down here and it's making a bounce right now. This is really more of a 3-bar reversal for the stop, because this is more of a momentum trade. For the euro, because it doesn't have as much volatility, or hasn't had as much volatility, just look for a limit of 1-to-1 risk reward. Depending on where you get an entry on that, you could certainly look for, you could trade more lots if you only have like a 30 pip stop or whatnot, based on where that stop would be. Because right now that would only be, let's say it just closed, about 3 or 4 pips below 111. It wouldn't be that large of a stop, but certainly only look for the 1-to-1 risk reward here. If it goes -5, you'll start to see this come down. One of the reasons why we use -5 and +5 a lot, because -5 would have to be a complete reversal of where this LP trend line is going. The LP trend line is coming up, so it would -5 would drop this into a lower low, if you will. So we've seen it before where things can kind of go up. Like, it never gave a sell signal right in through here. It never went like -5. It kind of continued making these higher highs. So we're going to kind of use all these kind of together, almost like green and red arrows, just waiting for it to kind of everything to match up here. I mean, we want everything to kind of match up here to the downside. And the focus here, even though we are kind of talking about risk on, risk off, the real focus here this morning is the dollar. In fact, I'll write that under the strategies here. We're going to look to trade dollar weakness. Risk on, markets up. Dollar strength. So even though we are indicating a negative market open, this could be one of those days where we start the morning down, go up, go down again. We could see a lot of seesaw action. Well, actually, more to the point, whipsaw action. And this is also after after 10 a.m. So have some patience here. You can kind of see here the dollar already starting to get weaker here at the open, which is right now the market's just now open. Dow's down 200 points, kind of like what the futures were indicating. So we're certainly getting some downward momentum here. Take some of these objects off the list. And there's a couple more that I want to look at here real quick, just for the sake of looking at a couple of pairs. Somebody had mentioned the yen here. On dollar yen, I think it all depends on what's going to drive it this morning, to be honest with you. You know, dollar yen has been in a free fall also since the market started tanking. A lot of that is the combination of the dollar also losing value last week. You can see this support level. Somebody mentioned 116 right down in through here. Obviously, that's going to be a key level for the yen, and I had to go to a 4-hour chart to view this, but obviously that 116 level is a key level right down in here on the yen. Thing is, you know, it's been showing some buying pressure all the way through this downtrend here on the 4-hour chart, and which leads me to believe that this fall was more about not as much about yen weakness as it was about dollar weakness, if you will, yen strength as much as it was about dollar weakness. And it's starting to approach down below this 116 level. You know, on a daily chart, you know, it hasn't been this low since this was back in January. So we're looking, you know, if it breaks through that 116 level, you're going to be looking at this thing falling through, you know, since September. So we were looking at, you know, 5 or 6 month lows here on the dollar yen. Bank of Japan kind of scenario here is, you know, hey, Bank of Japan, how did those negative interest rates hold up for you here? Not very well. Did about as well for you as the interest rates for the euro and for the Swiss when they went negative. Didn't work out so well for you. If you were wanting to trade the yen, with the behavior of the commodity currencies this morning, I'm going to switch gears here to CAD yen. Instead of trading the yen, I don't want to look to be a buyer of the yen. I think like shorting the euro dollar if the dollar gets stronger is probably, you know, one of the best bets to make here this morning. But I also want to look here at the CAD yen, and only because to go more into a dollar neutral position. Meaning, if I would rather trade the yen as more of a risk off currency if the markets continue to the downside. So I was looking here at CAD yen here this morning. Sorry, I had to let out a little sneeze there. And it already broke down through a support level right in through here, and that's mainly based on the same thing as the pound, as oil coming down. So if we wanted to take this into more of a direction of weakness here on CAD yen, I'm not as concerned on key levels on the CAD yen pair. But this is one that's been already during this downtrend has kind of settled into some lower lows and lower highs right in through here. So it's already kind of starting to reverse course. Dollar neutral would be kind of a good play to go in between, you know, kind of what's occurring here in the markets. But this support level right in through here, which is already kind of breaking through. There we go. This will be another after 10 a.m. trade. I'm going to stop. And then the limit. We've had extremely good luck trading these 1 to 1.5 risk reward trades on CAD yen. We'd be calling this one, this would also be a risk off trade. And this may not make a whole lot of sense to you, but let me, I'll talk about it here in just a second. Believe me, there's a method to my madness. So the idea of going short CAD yen, you know, we have a dollar strength trade on euro dollar. Should it break in through that 111 level? Obviously the swing high would be this recent swing high right in through here. So that's, you know, if the market's going down, if the markets recover, that should bring the euro into a more of a buy scenario. So that's if this is all based on if the market's going up and down today, it drives the dollar. So this is all dollar driven. So we're looking kind of like last week. Now, in the last 2 weeks, we've seen two different currencies, which have been driving the market. Okay. Last week we saw the dollar drive market action, meaning markets up, dollar up, markets down, dollar down. In the several weeks before that, we had a ball, and I think one of the reasons why kind of our trading shifted a little bit to where we were very profitable the first couple of weeks of the year into January, and it kind of tapered off there in this first week of February is because you know, in that first part of January, the yen was driving market action, meaning markets down. The markets down, yen got stronger, yen pairs went down. Markets up, the yen got weaker. And so that kind of shift in tone in the market, we're kind of trading the market both ways here, saying, okay, well, let's go with what the most recent driver of the market has been, which has been dollar, you know, the kind of dollar, you know, getting weaker based on markets going down. But let's also put something in our back pocket just in case the yen becomes a driver. especially with it being so close to that support level right at that 116 level. I wouldn't want to look to be a buyer of the yen until it can prove and break out. You see here how it hasn't really broken out into any higher highs, except for right after non-farm payroll, but hasn't really broken out above any key levels as of yet. So we're kind of, we're trading the market as of recent drivers of the market, and we're also trading the market based on what the driver of the market was several weeks ago. So, and folks, I'm not Karnak. I can't predict the future. So as a trader, you're also a speculator. So you kind of take what the market's been throwing at you, and you try to make as much sense out of it as possible. The best times to trade is generally when there is something driving the market and it's very obvious. It's not very obvious right now. And plus lack of volatility, it creates some scary market conditions where we just want to make sure that we proceed with caution, hence the extra little bit of confirmation on some of these trading strategies. So I'll pull this up for today. There we go. All right. Now, speaking of euro, I want to talk about my good friend the euro here real quick. One of the things that's, when you look at like a daily chart on the euro and you kind of zoom out a little bit, this is, going back to April of 2015, this is a prevailing trend of a market right back in here. But let me just talk about this right in through here. Euro dollar is the most actively traded pair, and this is a lot of the activity that we've been seeing. We haven't been seeing really big, strong prevailing trends. The easiest markets to trade are these types of markets right in through here, but we're still sitting here kind of in a more of a whipsaw type of sideways market for the last year. Get a lot of students that have been trading the market with me for like the last year in 2015 into 2016, get a little frustrated, and rightfully so, because when you see kind of moves like this, where the market's just kind of range bound, it's not making any real big precipitous moves. I know this is on a daily chart. We can still hit on the top and bottom, or going through. It hasn't really even set up a whole lot as far as even pass-through levels, if you will. But it's just kind of been range bound in through here, and for the last year. And I think that can change here in 2016. I still think this is going to be a big year for Forex trading, because I think we're going to see some, pretty big fundamental shifts in the market. But, looking at this, on the euro dollar right in through here, you can see kind of the head and shoulders top that's formed right in through here. It's already kind of broken through it, but I'm still waiting for it to break through that 111 level. The question becomes, long term, what I see here on something like the euro dollar. One thing I can assure you of is, as we get into February, into March, especially here on the euro, if this euro continues, continues higher, let's say the dollar keeps driving the market price action down. Somebody asked me of where I see the euro dollar long term. And let's just take, the euro fundamentally should be going down with their QE in mind of what's happening in the Eurozone. In March, they're going to announce a stronger QE program. Of not only have they extended the timeout for their QE program, but they're also going to increase dramatically the amounts in which they're printing each month in order to stave off deflation. I can assure you that if this euro keeps going up and up and up, one of the easiest trades for the next month is going to be right before the ECB decision. If this euro is right, and I'm talking about March here, when the euro ECB has their interest rate decision in March, I think one of the easier trades will be actually looking to short the euro dollar right before that decision. I think you're going to see a lot of liquidity providers probably start to sell this thing off before the March ECB decision. It could also conceivably come in February if this thing keeps going up and up and up and up. So, that's why, even as the market continues up, longer term, we should still favor the sell side on the euro dollar. Generally speaking, QE at some point has to work out in the euro's favor, where the euro continues its downward spiral, which is exactly what Mario Draghi wants. So one of the welcome things would be on the euro dollar, if it does continue to the upside as we head into the European Central Bank and their upcoming announcements from Mario Draghi, is looking to short before their ECB decision and acquire short positions on euro dollar, because we've had quite a bit of luck following the ECB, and I can assure you that they're not going to make the same mistake they made back in, what was it, December, where they didn't announce enough QE, meaning they didn't extend their QE out dramatically enough. They only extended it out time-wise. They didn't extend it out by how much money they were printing out. They already hinted at it back in January that they're going to extend, they're going to increase the amount of asset purchases. So the danger is every time Draghi comes out and talks up until now to the next ECB announcement, if it's ever a state where the euro is going up, he's probably going to try to verbalize an increase in probability of a stronger stance on their QE program, or a stronger increase on their QE program, kind of echoing what he did in January, of kind of that whatever it takes, whatever it takes to stave off deflation, because a strong euro is a very much a key factor in the deflationary pressure in the eurozone. So that's kind of looking at it long term. So favoring a bounce to the downside on the euro is what we're looking at today to trade into dollar strength, just because I think it's very telling, the fact the euro is coming up here and almost hitting off that 113 level. So, but on a day like today, who knows? This is one of those days where it's very hard to gauge direction, because, like I said, kind of a lack of liquidity in the market right now. So right here at the end of class, we had the S&P went down 31 points, NASDAQ's down 87 points, Dow's down well over 200 points. So we are getting a big push down in markets here this morning. Yeah, 260 points on the Dow. So we are getting a bit of a sell-off here. So we'll continue looking at these different trade strategies. Probably the one that's closest to execution is right here on the pound. You can see the dollar's given in to the CAD. It's kind of given in short term here, just in the last hour or so. It's given into the CAD. It's getting weaker versus the CAD. It's getting slightly weaker in the last hour versus New Zealand. Obviously, it's weaker versus the yen. Weaker versus the Aussie just in the last 2 hours. And you can see it's weaker versus the Swiss, weaker versus the euro. It's come back up off of lows, and it's weaker against the pound. So as of right now, the dollar, with this market kind of turning here, is certainly driving the weakness here. Pound, we just want to wait for our confirmations. Yeah, there is a semblance of a bearish Gartley on the pound here, or on the CAD. but it's about 70 pips away from that. So it is making a slight. Actually, the A didn't really. Now that I look at that a little bit closer, the A didn't really retrace, but this is just a retracement. That's not a Gartley. That's not a bearish Gartley. That's just a retracement. A didn't retrace. A has to retrace between 38.2 and 88.6 of, or B has to retrace between 38.2 and 88.6 of A. So no, I wouldn't call that a bearish Gartley. The Gartley I like the most is right here on the pound, but I'm still going to proceed with caution on that pound there. So yeah, I would just call that a normal retracement on dollar CAD. So pound right in through here. This is certainly the one that's closest to execution. It's already hitting this 4,400 level, but I'm going to wait for those 1 hour totals to reverse course to see if we can't get an entry on that. And beware the whipsaws. In fact, to kind of add to the strategies here for this morning, one thing I did forget to add. Whenever I say upon entry, generally we wait to trail our stop usually when until we've reached at least 50% of our take profit level. Like if we're risking 50 pips to make 50 pips, we'll generally wait to trail our stop up until we've hit at least 50% of our take profit levels. In the market today, just like on Friday, with the lack of liquidity or what feels like a lack of liquidity, I would go ahead and just trail that stop right from the get-go. Every hour, trail that stop down. Let me go ahead and save this. Also save this as a PDF. Somebody, there we go. So I was looking at somebody's comment on here. I didn't say lack of volatility. I kind of said lack of liquidity. That's two different things there. I'll share the PDF with you and the Word document on there. Don't mistake one for the other. Lack of liquidity doesn't necessarily mean that you'd see a lack of volatility. Those are two different things. Lack of liquidity can often lead to an increase in volatility because there's a lack of support and resistance in the market when it comes to the opposite end, when it comes to buyers and sellers. So liquidity, those are both their own islands. As far as liquidity and volatility goes, I'm just saying with being a Chinese banking holiday, I know they're a big player in the Forex markets, as are all major central banks right now and banks around the world and especially the larger economies. So I'm just saying with the Monday morning after a Super Bowl, which is kind of a national holiday here in the U.S., banking holiday in the pound, could be a lack of liquidity. That generally can lead to actually volatility and more volatile whipsaws up and down to where you put in a trade, you put in your stop, and seconds later you get stopped out because the market can often, when there's not a lot of directionary trades either going against a trend or for a trend where there's not a lot of liquidity following it, it doesn't take much for the markets to reverse those trends. So yeah, those are two different things as far as lack of liquidity and lack of volatility. The lower liquidity, the more careful you have to be, just because you have to watch out for, you can't really hang your hat on a trend throughout the day. You have to kind of you have to proceed with almost extra caution in your risk and money management when you feel that there's a kind of a lack of liquidity in the markets. But that's all I got here for this morning, folks. Pound, of course, is probably the closest here. Still at a negative. So market's still trying to find its direction here. Let's see where CAD yen is. Trying to break lower. Trying to break lower there on CAD yen. That's another one that we're looking at. That yen strength continues. It already broke through the low, so I just want it to make sure that it's clear of any lows when it goes -5. If it goes -5. Really using the PitView to my advantage here. So anyway, you have your trading sheet for today. Proceed with caution. Don't do anything I wouldn't do. Meaning don't go over leveraging your account. And I will chat at everybody later. So thanks for coming in this morning, everybody. Let me go ahead and